Well, we'd all love to see this come to some conclusion. We've been going through this for a number of years now. I don't know if the Prime Minister has the votes as of this morning. Talking about being up early, I'm sure they're up and running their war room 24/7. But he's got a lot of work to do to get the votes. I'm actually heading to London next week for a front row seat. We would all like to see resolution. This is an issue that's dangling out there over the markets. Whether he can pull it off remains to be seen.
You spend a lot of time with bankers here who have a feel for how much deferred investment may be going on, not only in the UK, but across Europe and elsewhere because of this Brexit purdah we've been in for the last 3 years.
Right.
Is it conceivable that there is a Brexit bonus once we get an agreement?
Oh, I think so. I think it's not only Brexit, but China and so many geopolitical issues have been weighing on corporate sentiment. Boardrooms have become very cautious. Why would you invest in some large capital expansion given the uncertainty? So I think there is some upside potential. If there is a trade deal with China, if there is a Brexit resolution, I think there could be a real upside.
There's been a lot of speculation among the economists about whether, if we have that deal, the UK should see an interest rate hike, whether there's an opportunity for Mark Carney to begin a process of normalizing rates. What's your feel for that?
Well, I'll probably stay out of Mark's business, but I have enormous confidence in him. He's done a fabulous job at the Bank of England, and I look forward to whatever comes next for him. But I think the UK is very lucky to have had him in that position over these years.
You just completely dodged the question there. Let me repackage it. I'm not asking you to second guess Mark Carney's strategy, but a big part of what we've heard here from the IMF has been concerns about ultra low interest rates and negative rates and the consequences for over-leveraged corporates in the non-financial sector if rates begin to go up again. Do you see any likelihood of a turn in the cycle on interest rates, given how negative everybody seems to be about growth?
It's hard to see it in the short term. I think you really need to see demand, and ultimately you need to see inflation, which we're not seeing. There are pressures weighing on the global economy. You mentioned secular stagnation. I talked to Larry Summers a couple of days ago, who was thumping his chest saying, see, I've got it right. And if you look at the amount of fiscal stimulus and monetary stimulus and monetary accommodation and ask the question, how much growth are we getting for it? And not much. So the idea you're going to see a turnaround in rates in the short term, I think, is probably not likely.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.